Good morning and welcome to this edition of The Market. I'm Avan Dabash, with me Aisha Faridi and Nikunj Dalmia. But I guess all eyes, at least last evening, were reined in on all the action on the tennis court. The end of an era, so to speak, because we saw a change of guard. The world number one, Carlos Alcaraz, was crowned as the new king in centre court. He won his maiden Wimbledon second Grand Slam title, and this really ended Djokovic's long reign at the All England club. So coming back up after a poor start, the 20-year-old Alcaraz ended Djokovic's 34 match-winning streak. He beat him in 5 sets, and the Spaniard denied the Serbian his 8th overall title and 5th title in a row. So the third youngest champion at Wimbledon. Clearly Alcaraz taking the crown now.
Yeah, I mean, from the word go, it was a slip for Djokovic.
No, he made a comeback actually. Yeah. I think he lost the first set. I tuned in late. But I think he lost the first set. That's when
he did make a comeback, but it was Alcaraz all the way. You could tell.
So is it change of? Is it? See, the tennis world in last 15 years, just like in Bollywood, it's dominated by Khans, has been dominated really by, if you frankly ask me, between Nadal, Federer, and Djokovic. Now, is this the change of guard, because Federer has retired, Nadal has been sidelined, and is Djokovic now losing its mojo? It's very early to say that. Every time we've discussed and we've deliberated that in the past 10 years, Djokovic and Nadal, they've made a comeback. Yeah, but it was an interesting match. It was something which I don't think anybody had predicted when the Wimbledon started, because Djokovic clearly was the favorite. And when the favorite, in a sense, does not win, it just makes you wonder that is Djokovic now really past its prime?
Well, for our markets, you can't say that. Just when you wanted it to consolidate a little bit, it sprung up once again. And last week too, we did see a fresh high for ourselves. Despite FII flows, though India is actually underperforming vis-a-vis some of the other emerging markets. So just going to bring up the stats for you on your screens right now as to how is it that we've actually done as opposed to other emerging markets. The benchmarks, they did manage to hit new highs. We gained for a third consecutive week. Broader indexes as well have managed to outperform. And actually it was Nifty Metals which managed to outperform as opposed to what the rest of the sectors did. And yes, on Friday, it's been a fab finish, almost close to that 19,600 mark, which we did clock on Friday itself. We closed just shy of that, Nikunj.
But at least above 19,500, we managed to close above that level after a lot of failed attempts.
So you got to ask yourself is that, look, why did we underperform and why did world go up? Is there a change of narrative, at least in the world? There is no change in liquidity. The dollar index. Well, we've already become that. If you frankly ask me, looking at the flows, our markets have, really made a comeback. But frankly, if you really look at the market from a very myopic lens, which is that last week what happened, there seems to be a subtle change in the global narrative. Dollar index is below 100, but is inching higher. Everybody now seems to be baking in that the US economy will have a soft landing. So is there a change in the global narrative? Because a outperforming market like India, when it suddenly underperforms, and suddenly when global markets, they outperform, even though the case for global markets, at least for NASDAQ and for DAX, is not that fundamentally strong, is there a change in global narratives in terms of the global macro positioning? Too early to say that, but for me, that is the watchword. Back home, when it comes to India, the question you got to ask yourself is that what should be the strategy? I will say it again. I think it's time to go lazy in large cap stocks. It's time to be selective in mid-cap stocks and don't go crazy in small-cap stocks. I think we are reaching that point in the market where the gains now will be limited and restricted. In small-cap stocks, you need to use the strength to book some profits. And in mid-cap stocks, I think sliver of the market is offering value. Now, this is not the Nikunj Dalmia or the 18 view what we had 3 months ago, but it's all a function of price and what the valuations are. My senses, and I had a chance of meeting a lot of FIs, went for a holiday, met a lot of friends, family who directly, indirectly are fund managers in India. The sense is that in large cap stocks, you still have a little bit of comfort. In mid cap stocks, you have to be very selective, and in small cap stocks, I think it's time to book profits. So lazy in large cap stocks, don't be choosy in mid cap stocks, and don't go crazy in small cap stocks.
You know, and Nikunj, even something that you've been discussing is that we need a new trigger for the markets. We're saying liquidity, macro changes, or earnings. Earnings are upon us now. We have critical names that will be coming out with their numbers this week. Reliance Industries, HDFC Bank, JSW Steel, Ultratech, etc. Is that, do you think, going to provide a trigger?
See, this is a big week.
Yeah.
And frankly, if you look at the market setup, the expectations from the entire market minus IT, I guess, are running high. The general consensus view is that banks will come out with good set of numbers and margins will be decent. The general consensus view is that most of the commodity companies will come and talk about recovery rather than headwinds. So the consensus is now clearly on the positioning clearly is on the long side, and the consensus view is that earnings will not only meet expectations, they will beat expectations, and that's the tricky part now. What we've seen in the first leg is that IT companies have bounced back, or IT stocks have bounced back. That's largely because nobody was expecting anything, but that is not the case. This week HUL expectations are high, Reliance expectations are moderate, HDFC Bank expectations are really high that they'll pull a magic wand now that the merger has gone through. So it would be a tricky week to call. Now what you need to monitor is that are we in for massive upgrades or are we in for minor upgrades? If we are in for massive upgrades, then that's the trigger for the market, which I really doubt, looking at the growth numbers and the positioning. So if there are minor upgrades and minor tweaks on the upside, what happens to the market? I guess it could be a case of buy the rumor and sell the news. In IT, the same has happened. In IT, the reverse has happened.
Yeah.
But I think for rest of the market, it could be the other way around.
Yeah, talking about IT, what a blowout performance irrespective of the earnings, which at large one would say were muted or a miss. You know, the question really is, after that big contribution that you had from the entire IT pack, and market cap agnostic, by the way, it was not just large cap IT names, but mid caps as well as small caps, they all participated in the move all through last week. It's seen the biggest weekly gains in about a year's time. The question now is whether this is just a dead cat bounce or will the rally for IT sustain? And with each IT earning, one thought, Nikunj, that this is just a one-day affair. Yeah. But no, IT managed to withstand all of it.
And delivery-based buying has been impressive, which means that a long buyer is actually back. So you got to ask yourself, is that has IT company... Is there anything big which has come out in IT numbers? The answer to that is no. Are they sounding very rosy about the prospects going forward? No. But is worst of the IT print behind us? That really seems to be the case. Now what we've heard so far, I think, is from TCS and from HCL Tech. The tricky one, I think, would be Infosys. Yeah. Because that really holds the key. Infosys, in the last quarterly numbers, almost dropped a bombshell when they changed the guidance. Are they likely to be far more sanguine this time and far more realistic? Let's hope so. Now the tricky part is that Infosys stock in the run-up to the IT companies, in the run-up has already, in the run-up to the numbers has already seen a 5-7% move. So could it be a case that Infosys actually, irrespective of what they indicate, could that actually sell off? Look, my view is that IT is not out of the woods. It is more like a deep swell, nothing more, nothing less. There are contra long buyers who are now churning their portfolio, which is that they're reducing or tweaking or peeling off some gains in banks and they're going back to IT. That I think is more like a tactical trade. It is not a structural trade. The structural trade in India is still banks, and you want to buy banks on a decline rather than chasing IT and assuming that you're going to miss out. If you miss out IT also, Aisha, you're not going to miss a powerful 2 or 3 year rally. It's not a trend. Banks is where the trend is. So while tactically you may say, okay, IT may give another 5%, 7%, but then what happens after that?
Yeah. Okay, so talking about that tactical trade, still remaining banks. Just a quick check-in on what the global setup is and the kind of handover that we got. Well, it was a bit soft when it came to the US markets. Lots of banks, lots of financial did come under pressure, but for the week gone by, it was solid weekly gains coming in across the board. For Asia this morning as well, we're taking cues from the US markets. There's some key economic data coming out of China, and that's the gift nifty, which is pretty quiet with a mild positive bias. In fact, it would be interesting then to find out what exactly all the global commentary is. We've got Anisha here to sum it all up for us. Anisha?
Oh, well, yes, important G20 meet which was underway over the weekend as well in Ahmedabad, India, and a lot of central bankers made attendance. In fact, it was the first visit of Ajay Banga, the new chief at World Bank, and he talked about how they've, the World Bank hasn't done enough to spur the private capex. He said that for infrastructure development, finally it's the private capex that needs to come through, and that's why he's banking on that. He also talks about how a lot of Indian cities are credit worthy, and hence municipal financing might be the answer for a lot of issues. We've recently seen a few issues coming in for municipalities as well, so this is in that direction itself. We also had US Treasury Secretary Yellen making an attendance, and she talked about how ending Ukraine war is the first and the foremost moral priority and imperative that they have. She also talked about her Beijing visit and said that that puts US-China relationship on better footing. She says that the US corporates want to see an environment where they can invest and thrive in China. India, of course, has been an indispensable partner, and friendshoring is something that they expect from India as well. Talking about China, we just got the data for GDP as well at 6.3%. It came in lower than expectation, but the PBOC holding steady for now. Lastly, just wanted to highlight what Peter Schiff has to say, and this is coming in as far as dollar index is concerned. Last week, we had seen dollar index slipping below the mark of 100, and that's what he's talking about, that the rise that we had seen in the CPI was on back of the 30% gain that we had seen in dollar index for the last 12 to 18 months. Now that the dollar index is coming off, he believes that CPI improvements will also happen, improvements in the sense that it will get lower, and dollar falling is an important factor for that. So a lot of important commentary coming in over the weekend as well.
Okay, thanks very much for giving us that heads up. In fact, let's find out a little bit more about our own markets, what the trajectory is, and more importantly, levels to watch out for. We've got Naresh Mirani joining in at the moment. Kunal Bothra will be with us in just a bit. And Naresh, let's get in your take, because multiple failed attempts, and it looks like the markets really saved the best for last. At least we conquered that 19,550 mark with conviction at close. It was a great week for the broader markets as well. What are the levels indicating that there's more optimism now?
So the trends have been pretty positive. On Friday also, we saw a nice bump up in the end, and we are back to a new all-time high. The case in point is the bounce back in IT was one of the contributors. Then you get ICICI Bank coming close to a new all-time high, or making a new all-time high and closing there. So overall, the bias is positive. It's just that at 19,500, 600, and index traders no more, say, a risk reward trade. So that is where you start focusing on stocks. But across the universe of Nifty top heavyweights, we are seeing good trends. So the bias is positive. Same is the case with Bank Nifty. Bank Nifty looks a little more interesting because it has yet not made a new all-time high again in the last week, which happened with Nifty. So out here, ICICI Bank has hit an all-time high. We are seeing a recovery in a lot of smaller names as well. So the bias is positive. If we sustain about 19,600, we could see a move towards 19,800. But overall, as we go higher, the base shifts. So earlier the base was 19,200. Now the base shifts to 19,300. So the Bank Nifty could be more interesting than Nifty going forward for this week.
Stock specific calls, Naresh, largely banks.
So first would be a buy on Hero MotoCorp. That's a stock which has given a multi-year breakout, as well as the new trending stock in the auto space. So that is where I expect a fresh move today, a flag breakout to be done. Also, the fact that the stock has crossed that 2950, 3000 mark, which was almost a stiff resistance for the last 2 years, as well as 5-6 years. Classical formation here showing good leadership. Did a retest of the breakout at 3050 and reversed. Expecting this to break out, go towards 3500, stop loss at 3000. The next one is the bank, which looks the most interesting one. A fresh all-time high on ICICI Bank. For the last month and a half, the stock has consolidated between 930 to 960 levels. The breakdown below that did not see follow-up selling, and now we are breaking out about 960 levels. 960 was also the high, the 52-week high and all-time high. A short-term cup and handle formation, sustaining about 960 could give a quick move towards 1050 levels. A stop loss to be kept at 940.
Right, okay, let's talk stocks, which you need to keep on your radar this Monday morning. Anisha joins in with the list. Anisha?
Hi, I just wanted to begin by discussing Avenue Supermarts. We knew that the revenue growth was close to around 18%. Remember, this is lower than what Street was penciling in, and this continues to be one of the weakest growth that we have seen of late. Over the last 4 to 5 quarters, Avenue Supermarts has been disappointing when it comes to its performance. performance as well. And even if you look at the margin performance, that's weak. That's been dragged down by the apparel segment, which forms almost 12% of the overall revenue share. And that's the reason your gross margins have declined by 125 basis points. That's percolating in the strategy going forward as well, because if you look at the total retail area that the company has added in the quarter gone by, that too was on the weaker side. And as a result of that, we have seen that, brokerages have tweaked their estimates by 1 to 5%. But for Avenue, of course, the bigger question always remains whether the valuation is apt or not, because it's an expensive stock. Though if you look at the 5-year average, it stands at above 70-75 times. Right now, the stock is trading around 68 to 70 times. So maybe there might be a bit of a comfort, and the management commentary is a bit mixed. They are pointing to some improvement, but the fundamentals as far as the apparel segment is concerned and the other segments are concerned, that continues to be quite weak. So an interesting one. I'm intrigued to hear Nikunj's view on that, and then of course we can talk about the other stocks as well.
Now, Nisha, my sense is simple that look, whatever you may say, it's an expensive stock.
Yeah.
And in this kind of a market, if you're looking at pockets of outperformance, you really do not want to align with stocks which are trading at P multiples of 50 plus, irrespective of what the promise is. DMart is no longer this haloed stock which everybody wanted to buy in their portfolio, because it was very simple. All you had to do is that buy DMart, and then because it was not very liquid, it was not in F&O, markets disregarded the valuation and there was a premium it was commanding. But we are not going through a phase where inflation entirely has cooled down. If anything which has taken a hit in this entire high inflationary scenario is value retail. You may argue and say that, okay, things are looking up. But I think the rate of change which will satisfy investors for next 3 to 6 months, I think is not there based on the numbers. See, the management has a vision, which is more like a 5 to 10 year vision. Markets, if you are looking at investing into the DMart stock for next 1 year to next 2 years, I guess the entry point right now does not look that exciting. It's a great company, franchise value is going to be strong, they're going to eat into market share, they're doing all the right things, they are pulse of the market. But market is all about buying gold at the price of silver. Guess what, right now DMart is gold and it is available at the price of diamond. That's my limited point.
Even the brokerages are saying that there's nothing exciting in the number. There's no reason to buy right now incrementally. So perhaps they're waiting for it to at least become the value of gold, if not silver, before they buy into that. But Nikunj, what about ITC? You believe that stock has seen a massive run up, and of course, cigarette forms a large part of their earnings as well. But if you look at the numbers that come in from VST Industries, that does point to a possibility that there could be a market share loss coming in for ITC. And I say that because the revenue for VST was up 11%. EBITDA, however, was down around 7% because the margins contracted by 600 basis points, and as a result the net profit was also down 4%. The volume overall is down about 7% on a sequential basis, and the management said that the entire industry has seen a mid-single digit volume growth in Q1. That's why they're talking about that in key market of Telangana there could be a bit of market share loss. They're making the efforts to improve the volume in the second half of the year, but the margin contraction is quite steep. The industry of course had a lot of regulatory challenges. They are behind. But for ITC, do you believe that cigarette is an important factor that Street is watching out for, or the focus has shifted to that value unlocking, the foods business that you also spoke with the management about, as well as the hotels?
VST numbers as a benchmark, Nisha, simply why? Because VST is too small and the brands which they represent are very different. I mean, VST has a brand called Charminar, and ITC's #1 brand is actually Wills and Goldflake. So you cannot compare, frankly, what the VST numbers are versus what Wills and what ITC key brands are. Also, ITC is gaining market share from the illicit market. Believe it or not, but the illicit market in India is actually 20% of the total market, which is what we say the 2 number ki cigarette, all smuggled stuff. ITC is gaining market share from there. In the last quarter, and I looked at the ITC numbers, they've gained market share. If they've gained market share, if they're gaining more market share from the illicit market, I don't think the VST numbers would be a benchmark. Not that tobacco is going to be a high-flying business for ITC, but my sense is that, look, what volume growth they've reported in tobacco is unlikely to come. But I think the tobacco business will grow at about 8 to 10%, and the FMCG business has turned around. So VST numbers are not going to be an harbinger of what ITC, full pictures would be, because the hotel business and the paper business are also firing full cylinders. So if the stock drops because of the VST numbers, it's a good time actually to buy into the stock.
Okay, yes, indeed. That's the view coming in. Just comparing the two players within that space, and those were the stocks on the editor's radar. In fact, let's find out a little bit more on the charts as well for some of these stocks. And I would want it to, Nuresh, get in your take. Just basis the kind of data points that we've got from VST Industries, the way ITC as a stock as well has outperformed. What's the view on the charts as to where ITC is headed?
So ITC in the near term has overdone the move. So if you were to look at ITC today, the stock used to lag the whole FMCG space. Now it's just say a few percentage points away from the market cap at which Hindustan Unilever trades. So the stock has overdone the move in the entire FMCG space. So at these levels, the risk reward goes off, but it has been not showing any signs of topping out. It's making those classical higher tops and higher bottom formations. So one can continue to hold on, but a fresh trade does not look exciting unless it's very short term in nature. Then if we go to the near term charts for the last, say 2 weeks, the stock has been in the range of 463 to 480 levels. So it's a small pennant formation here. If it sustains above 480, you get a move towards 500, 510 levels. So that's the trade here. But overall, one has to now keep very close stop losses. So the stop losses shift to 465 for the stock. And out here, the trend is still positive, but the risk reward is not great. Continues to be the leader in the FMCG segment. So more like a riding onto the move, but being very alert.
Okay, that's the view coming in on ITC. Nuresh believes that perhaps the move on the upside has been a bit overdone. Well, moving right on then with HDFC and HDFC's bank's merger, what's the way forward now? And what kind of synergies can we see reflecting for the bank? Well, in an exclusive chat with Keki Mistry, the man who actually steered the housing finance giant, he says that the potential for growth is phenomenal. Listen in.
The potential for growth is phenomenal. To my mind, the asset growth opportunities in India are just unbelievably strong. And I'm not talking only mortgages. I'm talking of just about every single financial service product you can imagine. Because the penetration levels of every financial service product in India is lower than most parts of the world. So there is phenomenal growth opportunity. Also, we have a young population. 2/3 of our population is below 35 years. People want to do things. People want to borrow money. People want to buy things. Aspiration levels have really risen over time. So all this creates so much of opportunity for growth. And as far as mortgages are concerned, that I can tell you with complete confidence that the growth is not there for 1 year or 5 years or 10 years. To my mind, it is there for several decades.
But is there something in terms of a roadblock or a teething trouble that you would first try and address
I mean,
for
first
the
we have to
merged
get,
entity?
I would say the first thing is the fact that people have to get sort of, start working together as a team, integration. Fortunately, that was not as much as a challenge in this merger as it could be for other mergers.
Yeah, because your ethos is pretty much the same.
One, ethos is the same, and two is there is no product duplication.
Clash. Yeah.
There is no product clash. We do mortgages, bank does everything else. So for certain functions, yes, corporate functions, there is a clash. But for everything else, there is not a clash. So yes, some time will go in the process of integration, a quarter, 2 quarters before the full synergies of a merger can emerge.
But besides integration, which is an internal thing, externally, the combined unit, is there any roadblock that you sense?
I mean, the biggest requirement to my mind will be funding, because the growth opportunities are huge. Funding today, fortunately, the bank has been very successful. If you look at the last 12 months, they have consistently kept raising their market share in deposits. So fortunately, touchwood, at the moment, that doesn't look as much of a problem as it perhaps could have in early 2022.
Welcome back. Still tuned into the market. Now, the other big talking point is India's G20 presidency, and that actually saw some successful talks taking place so far. The third G20 finance ministers and central bank governors meeting, that's scheduled later today and tomorrow as well in Gandhinagar, Gujarat. The meeting is going to be chaired by the finance minister, Nirmala Sitharaman, along with the RBI governor, Shaktikanta Das. There's a total of 520 participants that are representing 66 delegations. In fact, my colleague Ankur Mishra is at the location and joins in to tell us what exactly to expect and what's on the agenda. Ankur?
All-important meeting of Finance Minister and Central Bank governors will begin very shortly, and this is happening after the deputies has met over Friday as well as Saturday. We also understand that there were several bilateral talks which happened with Indonesia. As far as the key deliverables of this two-day meeting, which is beginning from today, is concerned, one of them is definitely the multi-development banks, how that can be progressed. Apart from that, the digital public infrastructure will also be discussed during these 2 days meetings, and also crypto assets guidance note is something to be watched out for, because there has been lot of talks and deliberations upon crypto assets, how a common framework can be there, coordinated with all the countries. Now that is something, that effort is taken under India's presidency, and it needs to be watched out. What is the outcome? Can India conclude on something by this or pass on to the next presidency? That is something which needs to be watched out. But for sure, the treatment of debt of nations which are under common framework is also considered in the meeting which is going to be held for 2 days. So all these things are on the agenda. It will be action-packed day from here at Gandhinagar.
It certainly will, and Ankur will be keeping us abreast with all the key developments. But in fact, over the weekend, you had the US Treasury Secretary as well, who attended the G20 Finance Track Meet. She once again touted strong relations between the US and India. While calling for better tax reforms and a stronger financial system, Janet Yellen said the nations need to come together to work on debt stress in emerging markets, adding that the US sees India as a significant partner in friendshoring. Listen in.
So friendshoring is an important foundation of our approach to increasing the resilience of our supply chains, and we see India as an indispensable partner in that, and more broadly. I hope to use this trip to deepen what is already a very significant relationship with respect to friendshoring that the United States and India have. Our ties continue to deepen. The United States is India's largest export market. Our bilateral trade last year reached an all-time high, and we are looking to see it grow even more. Friendshoring will also be a significant area for discussion in the next portion of our trip in Vietnam. So I aim to strengthen our bilateral economic ties, and behavior by the private sector is really an important part of friendshoring, and we are seeing continued announcements of investments in India by private firms that see India as an excellent place to be producing and exporting to the United States.
That's Janet Yellen, but you also had the Indian Finance Minister Nirmala Sitharaman shedding some clarity on the government's view on crypto assets, also stressing on the need for a robust financial institution, calling for more private investments to develop urban infrastructure. Listen in.
To complement the pool of funds available for infrastructure, in addition to public investment and finance provided by MDBs, we need alternate solutions to leverage private sector participation. In this context, innovative financing instruments such as blended finance, structured project finance, securitization, thematic bonds, biodiversity offerings, payments for ecosystem services, and local currency finance, some of the need, etc., need to be explored based on country-specific circumstances. By embracing these innovative strategies, we can build and bridge the financing gap, foster sustainable development, and propel the growth of infrastructure in cities.
Okay, let's also welcome on board Kunal, and of course Naresh is with us already. Naresh, the one sector that I wanted to pick up in on definitely is IT. The kind of strength that IT actually showcased all through last week after the numbers, which were at best muted at large. Do you see that strength continue this week too?
So going into the results, the expectations were low. And that was the case which led to a lot of short covering across the board. And that too happened the next day post results in say HCL Tech or in the TCS. We did not see the covering on the same day as such. But the current move is not a case wherein you actually expect it to go further. So a lot of these stocks may take a pause, specifically TCS, which has overdone the move compared to an HCL Tech, which has stronger trends. So TCS is back to that 35.20 to 35.50 mark, which has been the resistance zone for the last 1 year. So I would expect some fade off and back to 3400 out here. HCL Tech overall, the trends are strong, but not been able to cross and sustain that 1150, 1180 mark. Did a correction going into the results and we've covered back. So the stock is at the same place. Infosys has been interesting. The stock has now recovered the whole gap which was there on the last quarterly numbers. So going more positive into the results, risky. So overall, the trends in IT are more of a short covering, not a new trend starting up. So out here, one has to be careful, would wait it out. The mid cap and the small cap IT relatively have been outperforming in a big way. Over there also, the ones which have outperformed have done really well. So the only stock which now comes as a clear breakout is Tech Mahindra, which has taken a breakout about that 1150, 1200 mark, spent almost a year of consolidation and is still down quite a bit from those highs of 1800. So the risk reward in terms of a long position on dips would be Tech Mahindra.
Kunal, what is in store for this week? More gains, sideways, or it's going to be a week where it's going to be back to IT?
Good morning, Nikunj. Just for that slight delay. I believe that it's going to be a mix of a lot of sectors. So, what happened last week, specifically on Thursday and Friday, is the IT stocks making a good comeback. And to offset those gains from the IT stocks, you had the banking names, the private sector banking stocks, the PSU banking stocks, for example, in the last 2 days, took a bit of a breather for themselves or a bit of a correction. So my sense is that we are now getting into yet another sector change where the sector churn where the IT stocks would tend to outperform. We saw a very big breakout coming out for large cap names, TCS managing to move up significantly high, Infosys, Tech Mahindra, even Wipro managed to give a swing breakout. So the mood is definitely towards the IT index. What I also witnessed was on Thursday and Friday, 2 days, you had a slew of short covering. So it started off with short covering in HCL Tech predominantly on Thursday. And then on Friday, we saw data for short covering, at least in the first half for many of these large cap IT names. And then in the second half, we saw more of long build up. So the delivery volumes increased for the IT stock. So there's a definite move towards the IT index. And I believe that would probably keep the sector a bit more busy. I would believe large cap IT stocks should be the flavor of this week.
I just want to look at the volume activity here and look at the volume activity. In Mastech, volumes on Friday were 15 times more than the 10-day average. Sonata Software 10 times more than the 10-day average. Just Dial, you may want to call it as an IT company, 8 times more than the 10-day average. MapMy India, well, not IT, but IT product, volume 6 times more than the 10-day average. So there is a huge spike which I think is visible in some of these stocks, and that's typical. I mean, the market activity these days is so compressed that you can't wait for months and years to understand. One good number, market was these stocks were bombed out, and then here comes the re-rating. Himang Jani, is there merit in buying large cap IT now? For those who did not buy last week, should they chance their arm and buy Infosys ahead of its numbers?
Yeah, good morning, Nikunj. Great to connect back. I do think that having seen a big underperformance over the last almost about 1.5 years, what is happening here is that the the numbers here are not that great, but there is a bit of a stability in the earnings and the outlook that the managements are giving out. Also, Nikunj, what we have to reckon is that a large part of the Indian IT companies have a much stronger correlation with what's happening in NASDAQ. And many of the large tech companies there have seen a very smart pullback. And we think that somewhere you will find that catch up happening over here also. So I think, large cap companies, be it TCS, Infosys, HCL Tech, of course, the numbers were not that great, but the valuation comfort is pretty much in place. So I think you will see some degree of outperformance across IT names, but we think that the larger comfort at the moment is with the large caps.
Hemang, also wanted to, understand the kind of frenzy now you're seeing in the IPO market. I mean, we saw the subscription to Senco, we saw the listing as well last week, and now you have a new one, NetWeb as well. Just wanted to understand what is it that you're making of this new paper which is hitting the market.
So, good morning, Aisha. I think IPO market and the activity has also a lot of correlation with the general market and the index, which is almost at all-time high levels. And we think that, it will entirely depend upon which theme is catching up the market, what is the flavor of the season. And of course, because, some of the IT companies and some of the platform companies had given out pricing at a much, much higher level. They are also slightly more sensible in terms of what they are offering to investors. So I think overall, so far, things are looking good. I think NetWeb, I have not looked at that in greater detail, but I do think that people are looking out for, interesting opportunities in the IPO space at this point of time.
Sure. The other one is also Utkarsh Small Finance Bank. Hemang, wanted to understand what's the positioning there?
Extremely positive, Aisha. I think, what we've seen this quarter in particular is that, the banking sector has delivered exceptionally good set of numbers. Of course, past 2 days, it's not outperforming, but we think that given that the overall, macros are in place, there is stability in the micros. So typically, it's a Goldilocks kind of a scenario for the banks and the NBFCs, particularly the smaller companies, the NBFCs, which were underperforming for large part of last 1 year. I think there is a great catch up at play. So I think given the fact that Utkarsh is offering at a very compelling valuations and the overall growth outlook is good, I definitely think that this would make a lot of sense for investors.
Right. Just want to highlight some of the earnings as well, which came by over the weekend. And Bandhan Bank, that's going to be one stock to look out for. The profits have been a slight missed because of the high OPEX and the lower other income. So look out for what this stock as well does. And, whole host of other names as well, which we would be looking out for. Just going to draw up the list. In fact, in seconds from now, we will take it across to Nikunj as well and highlight what are the stocks on his radar. But remember, LTI Mindtree, HDFC Bank, these are important numbers due for today. So that's going to be an important set to look out for. Avenue Supermarts, the earnings have been a little bit weak. So we're going to be looking out for an earnings reaction coming in there as well. That stock is the other one which is going to be on our radar. Remember, it's been a weak first quarter for them. There's been a margin miss now for a fourth consecutive quarter in a row. So let's see what this one does. Angel One, which has been prohibited from adding new authorized persons for 6 months, that's going to be another stock on our radar. And especially given that the earnings were fabulous and the stock price reaction to the stock, to the earnings as well, was pretty fabulous all through last week. Friday, of course, you did see a bit of a fall on the stock. And then Rallis as well. The revenues have come in lower by about 9%. PAT as well has slid about 6% on a year-on-year basis. So this is going to be another stock to look out for. For Just Dial, of course, it's a big beat. The average realizations have managed to reach the pre-COVID levels already. Avan, what's on your radar?
Well, we've got two stocks on the editor's radar today, Aisha. So let's take it then to the first one, and that's Federal Bank. And it's pretty interesting, came out with its numbers. You saw an adverse stock reaction one day. And interestingly, Nikunj, it's one of the cheapest banks on a 12-month forward PE basis. 1.1 times, and Citi as well has a pretty positive view here.
We've identified Federal Bank purely based on the Citi report, and it's a very interesting report. It used to be this Morgan Stanley tactical idea.
Yeah.
Guess what? Citi has also started a similar kind of a note. Corporate event, direction upside, duration 90 days. What Citi is saying that in the next 90 days, they expect that the event-based catalyst for Federal Bank will ensure that the stock in the near term could actually move higher. If you frankly ask me, Federal Bank has not really lived up to its expectations in terms of what its capability was and what the delivery is. There have been issues and there have been challenges. Bottom line here is that with the franchise value and with the management which is in a sense led by Shyam Srinivasan, I was hoping that this stock would have been on a different kind of a plateau. Look at what IDFC has managed to achieve. Look at what AU has managed to achieve. Federal is nowhere close to what the other banks are. We can argue back and say that it's an old bank and you cannot compare an IDFC bank with, let's say, Federal Bank or AU with Federal Bank. But my sense is that it's a slow mover. They've got variety of issues. But at the current juncture, there could be a case that it is cheap, it's bombed out. And given that markets right now are looking at shifting from expensive stocks to cheap stocks, and given that there is a lot of tailwind which is there in some of the banks, I would like to believe in Citi's report that in next 90 days, there could be a corporate-based event upside. But I'm intrigued with this report. Never read such a report from Citi that opening upside, a 90-day catalyst watch, direction upside, duration 90 days. 90 days stock upar jayega. That is what Citi is saying.
Very specific. So maybe there is some sort of a trigger. Maybe we'll see that catch-up play as well on Federal Bank. All right, let's move on then. Infosys. All eyes reined in on this one, of course, when it comes to the numbers. And it's interesting because we've mapped out the data as to how the stock has performed prior to its earnings, what kind of numbers we've seen over the past many quarters, how the stock as well has reacted, and the fact that, Nikunj, from that peak that we saw in the month of February, the stock is down about 20% plus.
Yeah, now look at this assortment last 4 quarters, 2 miss and 2 numbers have been above. So frankly, there is no trend here per se. It's like odd and even, right? But what is important here is that every time when the upside has been strong, the gains have been rather limited and restricted. Let's say in Q2 FY3 when they changed their guidance, and the gains even after their strong December commentary was not that strong. However, when they have disappointed and when they missed, the fall actually has been quite powerful. Now in the post TCS numbers, Infosys as a stock has already appreciated by a good 7-8%. Now, even if numbers are strong, what happens to the near-term upside? Guess what? They are no longer bombed out. Markets are excited about it. Markets believe that this is the next contra bet to be in. TCS is a high beta stock, even though the stock is trading below historical averages. Based on the commentary, which we've heard so far, let's say from TCS and from other IT companies, I don't think there is going to be a complete change in terms of the business and outsourcing environment. It's an incremental change which will happen. But if the industry is going to go through incremental improvement, the stock price change has been very rapid. So it really could be a case of buy the rumor and sell the news for Infosys, purely given the recent run-up what it has seen. I don't expect any dhamaka numbers.
Yeah,
it could
but
be
hopefully not a repeat of last quarter.
It will not be a repeat of last time.
Yeah.
But even if it's incrementally positive and even if they marginally beat or meet the expectations, then what happens? The stock has run up, numbers are okay, then what happens to the near term? There could be volatility or there could be some profit booking. So that classic good stock market Wall Street quotation, buy the rumor, sell the news.
Okay, there you have it, Aisha, when it comes to Infi and Federal Bank.
Hemang, last week you couldn't take your eyes off from IT and especially how the markets were reacting to the earnings, could you? Are you also surprised by the way the market reacted to those numbers? And do you think that could be the same in Infi's case as well? Because that could, in many senses, be a game changer, right? When it reports its numbers this week on Thursday.
So, Aisha, typically it's a classic bottom formation at play for the IT sector. We all have seen how the sector has underperformed. I think if you look at the numbers per se, there was nothing really great when HCL Tech, the numbers were quite okay. The guidance was also not great. Same was the case with TCS. So I think it's more about how much is already in the price, and people are now kind of setting their expectations for next year, versus consensus. So I think there is going to be a good amount of exciting action. You might see a bit of a consolidation, but I think from a risk reward point of view, this is one sector that still offers a lot of value, and particularly for the large cap names, given that they are also known for their aggressive buybacks, there is going to be a fair bit of stability as we see more announcements come through.
I'm going to shift focus and move to one more stock, Naresh. We don't discuss this one, but this is GE Shipping. The volume action on Friday was quite amazing.
So the stock has been a slow and steady mover. That's been the problem. The stock has given a breakout multiple times, but the moves are very slow. So if you look at it, the last all-time high for the stock was around 750 odd levels made in November. And post that, it gave a breakout in June. And today we are at 788, 800 levels. So it sees those spikes of price and volumes, but the momentum is not strong. The trend has been strong, but over the years, the stock has disappointed in terms of whenever the market corrects or the shipping cycle goes off, the stock corrects and drifts for multi-years. So that's the problem. And over the last 1 year, the stock has done really well. So from 400, it's almost 800 over the last 1 year. So whether it tops out now or takes some more time is tough to call. But out here, the momentum is not great. The trends are up. So if one is looking at a trade yesterday on Friday, also it faded off from the highs of 810, 820 levels to close lower. So out here, would look at a trade with a strict stop loss at 760 and look at a target price of 880 to 900 in the short term.
Okay, 788 rupees for GE Shipping. I'm going to switch gears and talk about the insurance sector. And among we don't talk about it. LIC is trending up. ICICI Lombard has shot up. Star Health from 550 has become 650 almost. Is there merit in now switching out of banks and going back to insurance?
I think, Nikunj, it would make sense to have some allocation for the insurance space, because by nature, the overall BFSI space will have a higher weight. But given that there is a fair degree of run-up in the banks and insurance also has seen some traction. But I think given the fact that the incremental data points are looking much better, both for the life insurance as well as for general insurance, more so for the general insurance. So I think, maybe ICICI Lombard, the Star, those are the names where we think that there can be a good amount of action given the broad, growth macro setup that we have. And in terms of valuations, I think there is not much to worry about at this point because the sector offers a fair degree of comfort in terms of risk reward.
Avenue Supermarts. And Hemang, you track this one closely, right? I'm looking at a couple of brokerage reactions on this one. It's a hold still from Jefferies, but the target has been dipped to 3,700 rupees. And the current market price is 3,845, by the way. They're saying that the EBITDA was slightly ahead of modest estimates, but a miss on consensus. Morgan Stanley maintaining equal weight, but again, target price has been dipped to now 3,786. If there is a meaningful decline in the stock, do you recommend buying into it?
I surely think so, Aisha. I think the overall growth that they have clocked from 2023 has been extremely good. I think despite the slower SSSG growth, they've managed to protect the EBITDA margin at pre-COVID levels. And as we see the general inflation easing and the company's strategy to open larger stores compared to smaller ones would surely give them a good amount of stable growth over the next few years. So in terms of growth outlook, I think one can surely expect about 25-27% kind of a growth. So if you see any meaningful correction, in fact, the stock has already underperformed. But if you see any meaningful correction, let's say about 3 to 5%, surely it makes sense to add.
Okay, let's get some more fundamental ideas going. Hear it out from Sandeep Sabharwal as well as Gautam Shah.
Some of the earlier stocks which we were holding continue to do well. So I think just holding on to them. Among the stocks which have been consolidating, I think BA Webac still looks good to me because that stock's moved up, it's consolidated, but the performance is quite strong. So I would still think that could have a sizable upside over the next 2-3 years.
I think railway is definitely overdone. So I wouldn't be looking at these prices. In fact, our recommendation is to take profits in the railway stocks. But defense is a very big theme. Defense is a theme for the next 3 to 5 years. So I don't think that's going anywhere soon. So I think stocks like HAL definitely fit the bill even at current levels. Just be careful in terms of your timing, because it's more from a long-term perspective. But so in a nutshell, avoid railway, but definitely buy defense.
Hemang, I don't know if you tracked this one, but Just Dial. I mean, it's a Reliance company, and it has not really lived up to the expectations of being a Reliance company.
Yeah, so Nikunj, not looked at it in great detail, but if you see the trend, some of the product companies have seen a very smart, a recovery in their operating performance. Even if you look at Just Dial, I just looked at the headline numbers, both in terms of revenue and profitability, there is a very smart turnaround. So I think there is an appetite for some of these, mid, small cap product companies at this point. Like you're saying, let's say a lot of momentum in names like Mastech and some of the platform companies. So I think from that perspective, this would surely fit in, but I don't look at it in greater detail. So no real long-term recommendation from my side.
Okay. This year, we don't talk about Just Dial, but 40% up this year, a stock which, we don't talk about it. Now, Nilesh, one stock which has intrigued me is Delta Corp. Ahead of the GST meeting, logical, it was an F&O ban. Then came the big sell-off where the Ultra HNIs sold out. The stock collapsed post the GST meeting, but the stock continues to remain in F&O ban. So what are markets telling you? I mean, for a stock which has been beaten down, where news is not on the right side, why is the stock in F&O ban, Naresh? Is this largely because short sellers are abundant?
The reason is overall in the smaller companies which are there in futures, because of the rules of market-wide position limits in India, whenever there has been a huge move, we cannot go to more than 5% of equity as a long or a short. Roughly on the numbers, and then you add to it options, open positions. So that makes it much more worse. So that is one reason, and that's the reason we keep on seeing at least 6 to 8 stocks in a derivative band. So for example, yesterday even RBL Bank, which moved up, went into a derivative band. So today 140% of OI is Delta Corp, 124% is RBL Bank of the market-wide position limits. So that is one specific reason which has been there, and it's been a problem for a lot of mid-cap, small-cap names in the futures segment. But Delta Corp, for now, it went from, on the day it went into ban, opened up into the ban and then went again, it went almost to 155, 160% of market-wide position limit. So that needs a lot of time to cross out. So overall, the case is now the stock is somewhere where everyone has given up. We've seen that 160, 180 was a zone where it bounced back, tried to bounce back to 240, 250, and we are back to that band. And over the years, that has been a band where it just keeps coming back to. Every time it has started to make a recovery, something or the other hits the stock. So for now, the stock seems jinxed, not actually looking at it going forward.
Kunal, you track the charts of Just Dial, right? I mean, of course, it's going to be reacting to its numbers as well. But a serious build-up ever since Reliance overtook the company, right?
Well, yeah, I do track the charts for Just Dial, and I think over the last 1 month specifically, the pace of rally is intensified for Just Dial. Now, when I compare this with the last, I think 3 or 4 years high, 2020, 1920 high for Just Dial, that was around 1,050 mark for the stock price. It fell down to as much as 550, 600. Spent a lot of time at those levels of 600, I think almost a year or 9 to 10 months was spent at the 600 mark for Just Dial. And in just the last 4 months, you've seen a steady recovery, and majority of the build-up has actually started off in the current month, where you've seen the stock up some 12.5 to 13% so far this month. But then when I look at this in terms of the price comparison, whether the stock has given a breakout, it's not yet confirmed a breakout. Even after the last 4 months of price action rally for Just Dial, it's still trading sub the 1050-60 mark, which has been a major resistance. The all-time high for Just Dial, I think, was around 1800 plus mark. So there are a lot of hurdles along the way for the stock price. But the only positive sign for Just Dial and stocks like these is that these are high beta stocks. So whenever they get into a breakout mode, they would take out the resistance in a very short span of time. So it's about getting into the groove, getting into the momentum. Just Dial finally has managed to come back into momentum. Let's see if the stock breaks past about the 1050 levels, hopefully in the next couple of days. That's where we would probably term this as a big breakout. And then we could look out for even 1800 plus targets, which is the all-time high targets for Just Dial.
As a move on the charts for a Zomato, for instance, last week, a solid 13% is what the stock gained. I'm just curious, Hemang, as to where your preference lies within this entire basket?
I think Zomato has been something that is doing exceptionally well for past about 4 to 5 months. I think a combination of a very strong operating performance, the management guidance about turning profitable, and the fact that they have also done extremely well. It comes to the market share. They have actually taken away about 4 to 5 percentage points in Swiggy over the last about 4 to 5 months. So I think. Surely the things are in favor of Zomato when it comes to the overall operating matrices. So I think there is some more upside, maybe about 100 or thereabouts. So definitely we think that in the current scenario, it makes sense to go for it.
82.5. Naresh, it amazes me. There's a time everyone said that look at tomatoes, not Zomato. Now everybody is saying that
everyone is still saying look at tomatoes because it's 150 rupees per kg.
No, but stock market folks are saying don't buy tomatoes, buy Zomato.
That's cheaper.
That's cheaper.
Yeah.
It was really the other way around. That time when Zomato was collapsing, everyone said that Zomato had become tomato. So it's a narrative.
Be it Zomato or tomato. That's the only constant in our lives.
It's the narrative which changes. See, in stock market, what happens? In January or February, just in and around when the Adani sell-off happened, every anchor investor who's been long-time investor in some of these fintech stocks, they sold the stocks as a desperate measure.
Yeah.
Whether it was Policy Bazaar, whether it was Zomato, whether it was Paytm, they was forced to sell because of liquidation. And that really marked the bottom. And typically bottoms are marked when the large investors who really have been long-term investors in stocks, when they start liquidating. For example, another classic case here is Aurobindo Pharma. With all due respect, Rakesh Jhunjhunwala was a long-term investor in Aurobindo Pharma. Guess when did Aurobindo Pharma bottom out? When Rakesh Jhunjhunwala, when he was there, he actually exited. And typically that happens that when somebody who's been invested in a stock for 5-7 years, when they take a structural view, until unless there is something wrong with the stock, and there's no mathematics and there is no science in it, I'm simply connecting the dots here, maybe looking at data and trying to, weave a story. But when a long-term investor, when they give up in a stock, that's the time. And as long as the business is going through a temporary fall, I think the stock typically bottoms out. And that is my point, Hemang, on Delta. We've been repetitive with this stock, but some of the ultra HNI investors last week who've been owning the stock from 5, 7, 10 years, they've now given up on Delta as a story. And that's the time the stock actually has bottomed out.
Yeah, Nikunj, I agree with you that in many cases, you see the bottom formation happen when, there is an extreme panic or the negative sentiment around it. And in case of Delta Corp, that might be true given this GST norms which have been put in place. The stock has corrected, and if you recall, Nikunj, this has been a high beta space. A lot of sensitivity around the government policy making, etc. But the fact remains that it's a small company, and we do not have too many options when it comes to this entire category. The gaming and the casino and all that. So I think some people will find it quite attractive at this point, given that it has corrected almost about 25-30% from the high. And I think large part of the negativity in terms of the new GST norms are already in the price. So it's just a matter of time when the F&O ban gets over. I do think that you will see a smart pullback in the name.
Couple of other stocks. While the pre-open rates, let's just quickly mark those, are indicating a quiet start for us. That's exactly what the GIFT Nifty as well was indicating. But MapMy India, that was a newsmaker last week. And remember this entire, drone GPS, Internet of Things opportunity as well is a big tailwind for MapMy India. The shares, by the way, have already seen a 30% uptick since the month of April early this year. If we can just bring up the 6-month chart maybe for MapMy India, the unmanned aerial vehicles or UAVs or drones are used to perform various activities, be it video, photography, mapping, surveillance, deliveries, even spraying insecticides. And this actually could provide the infrastructure for those mapping services. MapMy India spurt up mammoth in the last in the last week, and it's seen about almost a 35% surge actually in the last 6 months. Hemang, this was a fruitful IPO, and since then you've pretty much seen quite a one-way move up coming in on MapMy India. I don't know how closely you've read into the fundamentals of this.
Aisha, what we've seen is that of all the companies that came up with IPO, this was one of the few companies which was not making big loss. There was certain amount of profitability which was there, which was surely a bit of a comfort. Also, the fact that the product company globally, as well as some of the companies in India, have seen good traction in their overall core business and the data points which they are presenting. So I think, there is some amount of appetite which is coming back into this space. And from that perspective, this is looking quite compelling. And being a small cap and mid cap company, I think some of the AIFs or some of the, small cap, mid cap focused mutual funds also would have a liking for it. So I do think that this kind of a space provides a good short-term tactical opportunity.
Right. Okay, Hemang, great to have you on the show. We'll let you go on that note. Let's just get in some other trading strategies as well and get in some mid-cap ideas going too, while the pre-open rates are indicating just a mildly positive start for us. Naresh, what's on your radar?
So continued like Ashok Leyland, the stock has hit a new multi-month high as well as hitting a 5-year high. Classical cup and handle formation, clear leadership to be shown now in the auto pack. The stock has done nothing over the last 1 year. Every time it has come to 170, it flipped back to 130, 150 levels. In the last 3-4 days, we are starting to see that relative strength as well to the auto sector as well as the index. Expecting this breakout to happen over the next few sessions. A target price of 190, stop loss at 164.
Let's find out what's on Kunal's radar. Kunal?
So that'll be a buy on India Mart. Now, I discussed the stock on Friday as well. There was a 26% jump in the open interest for India Mart on Friday's trading session. And the price action was also quite buoyant for the stock price. It's come back towards a 3-day swing high, which means that there is a strong possibility that the stock will see a further up move. So 2,900, 3,000 could be a target range for India Mart, and stop loss could be kept at 2,700 pounds.
All right, thanks very much. Those are your mid-cap calls, but let's move on. Lots of other news that we're tracking, and the Twitter owner Elon Musk has said that the company still has a negative cash flow because of the heavy debt load and as much as 50% of a drop in ad revenues. Separately, he also announced that the platform will be increasing the number of tweets verified accounts can see each day by 50%, which has come after a lot of backlash and complaints from users. Meantime, Washington-based software giant Microsoft has signed a 10-year binding agreement to keep the Call of Duty franchise on the Sony PlayStation platform following the planned acquisition of Activision Blizzard. Do remember that the announcement is significant because Sony has resisted the agreement for the longest time, marking a very big roadblock in a $69 billion deal. Meantime, in a bid to provide relief to the people that have been affected by soaring prices of tomatoes, the central government has decided to sell tomatoes at 80 rupees per kg. Earlier, it was being sold at a discounted rate of 90 rupees per kg. However, prices in the retail markets, well, they've continued to run up now at 250 rupees a kg in some major cities. And remember, that's largely due to the monsoon and the lean season.
Well, talking about monsoon, even as water levels have receded on the Yamuna, waterlogging woes continue to plague the national capital as the city continues to receive fresh spells of rain. Levels had receded to the 205 mark, following which some roads had been opened up to ease traffic. However, the IMD has predicted more rainfall today, keeping Delhiites on tenterhooks. And the second edition of the mega opposition meet to be held in Bangalore today ahead of the monsoon session of Parliament. 26 parties are going to be huddling over the next 2 days to forge a united front against the centre. Sonia Gandhi is going to be also attending this meeting. And back to markets, Unipath India, that's going to be one stock which is going to be in focus as buying is being seen in the stock by two large PMSs. Which ones are those and why the interest in this stock? Sharad is here with all the khabar. Sharad?
Well, yes, in focus we are having Unipath India, and what we are hearing from our sources is the buying has been seen from two large PMS houses, and also our channel checks are suggesting that there is a stronger demand in the US market, especially on the grain demand front. Now, almost 50% of the revenue comes from this segment from the US geography, and also the important thing is a strong commentary has been coming in when it comes to the global clients such as Kubota, John Deere and Agco. Now, there are already marquee investors there included, which includes the likes of Abacus Group as well as Aditya Birla Mutual Fund. Now, looking at the stock itself, the stock is up just 12% from its IPO price and it's trading at a valuation of almost 10.3 times for its FY25 PE numbers, which is actually at a significant discount when it comes to its peers. And also JM Financial has given a buy rating to the stock with a target price of 780 rupees per share. But there are certain risks associated with the stock, as what analysts are stating. They've said that the higher inventory levels can actually limit the production going ahead, especially in the third quarter of calendar year 2023 itself. And overall, the demand from Europe still remains muted, and roughly almost 23% of the revenues come for the company from this segment.
All right, thanks very much for giving us all that khabar. Let's move right on then and find out what exactly the index strategies are from our charters this morning. We're stepping into a brand new week. We've got earnings on our mind, as well as the fact that yesterday on Friday we managed to wrap up above the 19,550 mark with quite a bit of conviction. Right, we'll just be getting those the index calls as well in just a bit. But in the meantime, let's find out what's on the editor's radar, revisit those stocks. They've been newsmakers as well. Federal Bank and Infosys, find out what Nikunj has to say.
We've identified Federal Bank purely based on the Citi report, and it's a very interesting report. You know, it used to be this Morgan Stanley tactical idea. Yeah. Guess what? Citi has also started a similar kind of a note. Corporate event, direction upside, duration 90 days. What Citi is saying that in the next 90 days, they expect that the event-based catalyst for Federal Bank will ensure that the stock in the near term could actually move higher. If you frankly ask me, Federal Bank has not really lived up to its expectations in terms of what its capability was and what the delivery is. There have been issues and there have been challenges. Bottom line here is that with the franchise value and with the management which is in a sense led by Shyam Srinivasan, I was hoping that this stock would have been on a different kind of a plateau. Look at what IDFC has managed to achieve. Look at what AU has managed to achieve. Federal is nowhere close to what the other banks are. We can argue back and say that it's an old bank and you cannot compare an IDFC bank with, let's say, Federal Bank or AU with Federal Bank. But my sense is that it's a slow mover. They've got variety of issues. But at the current juncture, there could be a case that it is cheap, it's bombed out. And given that markets right now are looking at shifting from expensive stocks to cheap stocks, and given that there is a lot of tailwind which is there in some of the banks, I would like to believe in Citi's report that in next 90 days, there could be a corporate-based event upside. But I'm intrigued with this report. Never read such a report from Citi that opening upside a 90-day catalyst watch, direction upside, duration 90 days. 90 days stock upar jayega. That is what Citi is saying.
Very specific. So maybe there is some sort of a trigger. Maybe we'll see that catch-up play as well on Federal Bank. All right, let's move on then. Infosys. All eyes reined in on this one, of course, when it comes to the numbers. And it's interesting because we've mapped out the data as to how the stock has performed prior to its earnings, what kind of numbers we've seen over the past many quarters, how the stock as well has reacted, and the fact that, Nikunj, from that peak that we saw in the month of February, the stock is down about 20% plus.
Yeah, now look at this assortment last 4 quarters, 2 miss and 2 numbers have been above. So frankly, there is no trend here per se. It's like odd and even, right? But what is important here is that every time when the upside has been strong, the gains have been rather limited and restricted. Let's say in Q2 FY3 when they changed their guidance, and the gains even after their strong December commentary was not that strong. However, when they have disappointed and when they missed, the fall actually has been quite powerful. Now in the post TCS numbers, Infosys as a stock has already appreciated by a good 7-8%. Now, even if numbers are strong, what happens to the near-term upside? Guess what? They are no longer bombed out. Markets are excited about it. Markets believe that this is the next contra bet to be in. TCS is a high beta stock. Even though the stock is trading below historical averages, based on the commentary, which we've heard so far, let's say from TCS and from other IT companies, I don't think there is going to be a complete change in terms of the business and outsourcing environment. It's an incremental change which will happen. But if the industry is going to go through incremental improvement, the stock price change has been very rapid. So it really could be a case of buy the rumor and sell the news for Infosys, purely given the recent run-up what it has seen. I don't expect any dhamaka numbers.
Yeah,
it could
but
be
hopefully not a repeat of last quarter.
It will not be a repeat of last time.
Yeah.
But even if it's incrementally positive, and even if they marginally beat or meet the expectations, then what happens? The stock has run up, numbers are okay, then what happens to the near term? There could be volatility or there could be some profit booking. So that classic good stock market Wall Street quotation, buy the rumor, sell the news. Buy the rumor, sell the news, will that apply for Infosys? I'm being very particular in revisiting Infosys. Why? Actually before that, let's look at Angel. They cannot add new clients. And the biggest hurrah for Angel has been that irrespective of how tough the regime has been, they've really added a lot of clients, and the monthly numbers what we've got in a sense have really indicated that the new client addition has been strong. We've seen what happened to IFL Securities when they had that SEBI order. Now for Angel One, I'm sure they will be able to go to SAT and get other things going. But as of now, the stock in the pre-open session is indicating that it's down 6%. What about Avenue Supermart or D-Mart? Actually, nobody remembers it with the name Avenue Supermart. You always call it D-Mart. That's a brand in the franchise name. It's not bad, but it's a liquid stock. It's not like the haloed stock. So even if numbers are not that great, the scope for disappointment is not very high. And then Reliance. It really added a lot of weight for the week gone by. The week gone by was about Infosys and Reliance. And Reliance, if it really gets its mojo back ahead of its AGM, and assuming that there would be big tall indications which would be shared at the AGM on the listing of Geo Financials, that becomes an interesting stock to watch, because now what I understand is that a lot of foreigners and domestic investors are buying into Reliance, because if you buy it, you get the share of IFL of the Reliance Financials also free. First rates, brand new week, 33 points higher for the Nifty. It is not a bad start. The breadth, I think, is the appealing point. The breadth is almost near perfect. 1:4 is the advanced decline ratio, which is not bad considering that last week we underperformed global markets. What do you want to look at? Well, you want to start with banks. You want to start with Z. Let's look at Delta, and let's not lose sight of IT stocks. State Bank of India 587, Delta Corp 186. Now let's look at IT. Z is not doing anything exciting whatsoever. Infosys down 8 rupees. TCS not going anywhere. Wipro and HCL Tech, they both are also not showing any kind of large price trend. So is the deep swell, the word which I'm using, is the deep swell in IT over? Let's see. Could it be a case of buy the rumor and sell the news? That may apply for Infosys this time.
Okay, Nifty IT a lot more tempered than what we saw all through last week for this one. A couple of other earnings reactions as well. Let's see what Bandhan Bank is up to. It's been a bit of a disappointment, Bandhan Bank, and brokerages are not too gung-ho about this one after its earnings. Almost 3% lower for Bandhan Bank this morning. Angel One, Nikunj highlighted, and it's quite unfortunate considering Angel One, Anand Rathi, these came out with excellent set of numbers just last week, and the markets did reward these stocks after their smart numbers as well. And now, of course, this negative news flow coming in on Angel One. There's also JSW Energy, which came out with its numbers. There's VST Industries, which came out with its numbers. Metropolis Health as well. The Q1 total revenue has been marginally negative. The company also saw an seasonal impact on the margins. Metropolis, though, is holding up by about 1% as we speak right now. Bunch of other stocks which are reacting to all the news flow on them. Just going to dig them out for you. Just Dial, there's been a Q1 beat. The average realizations have now reached the pre-COVID levels. 3.5% gap up on Just Dial. 360 is what you're seeing on this particular stock as we speak right now. And then Rallis as well, which is, reported its numbers, and the revenues are down 9%, PAT down 6% on a year-on-year basis. So these are a bunch of stocks which are in focus, although Rallis holding up in the green right now. Tata Steel Long as well. The net losses have contracted. Margins have come in at 7.1%. Tata Steel Long, though, not a very liquid stock, 0.7% higher for this one as we speak. Power Grid, the board has now approved advanced metering infrastructure projects worth over 4,000 crore rupees. So look out for what Power Grid as well does in trade. There's HAL, which has had an MOU with Safran Helicopter to set up a joint venture for helicopter engines now. HAL gaps up about 1.5% as we speak right now. There's CCL Products, GTPL Hathway, Unichem Labs, Kesoram Industries. They've all come out with a decent set of numbers. So all these stocks are in focus this morning. Let's just revisit what the IT big boys are up to, and whether or not you're seeing any follow-through come by on a TCS, on a Coforge. Finally, these stocks are arresting that move up. Wipro, though, just marginally in the green. HCL Technology is flat, and Infy ahead of its numbers on Thursday. That's a little bit in the week. Coforge marginally higher as we speak. What about HDFC Bank? That's also due to report its numbers, and LTI Mindtree as well. The first after it becoming a nifty company, remember. LTI Mindtree marginally higher, 5108 on this particular stock. Kunal, a very muted Monday start. What trades are you punching in?
Well, yeah, muted start. I was actually looking at the banking names, and as you rightly pointed out, some private sector banking stocks are struggling a bit. So I'm expecting a flattish movement on the indices, at least in the first half. The stock which I would look to trade in the open would be Hero MotoCorp. So we saw a very good move coming out for the stock on Friday's session, making a comeback from 3,080 odd levels. So that's a stock which I would be betting on from current levels, expecting the stock to make a fresh swing high and a 5% upside over the very near term.
All right, Naresh, let's find out how you're reading into the market open this morning, and what's the first trade you're punching in?
Expecting a pause to continue in the markets. Continue to like the same stock, Hero MotoCorp, which is showing strong trends. Looks interesting. Any dip to 31.20, 31.40, 31.30 in the day would be an intraday buy opportunity.
So